In this video, I will show you exactly how you're supposed to be approaching the market from a multi-time frame and order flow perspective. So we will be taking a pair, analyzing it from a technical perspective, checking the COT data, so the commitment of traders, and by using the combination of the two different analyses, we will be developing a trading plan for a pair and identifying the best zone to be looking for a potential trading opportunity. So the video will be very educational and I will help you develop your own trading plan by understanding the key concepts that you're supposed to be looking at in the market. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, in today's video, what we will be doing is performing a full breakdown of Euro CHF. Why? Because it's a very interesting pair to follow for a potential trading opportunity with a very good risk to reward. So we definitely need to speak about it. Now let's start by first understanding what is the overall situation here on Euro CHF. What happened lately? Now, if you remember, in my first breakdown on Euro CHF that I made on TradingView, what did I say a couple of weeks ago? I said from this area here, actually the market was here, I said from here we want to see a retracement to here before the huge move to the upside. And in fact, that is exactly what the market did. You find that analysis in the description of this video, and the reasons for which we wanted to see the move to the upside is, first of all, hedge funds were clearly adding a lot of longs on the euro. We were seeing a huge shift from minus 114k all the way up to positive net positions. We will go back to the COT data later, and I wanted to see this move to the upside also because we had this overextended M formation on the weekly time frame, and as you know, after an overextended M formation, you want to see the market complete the pattern at the neckline. And in fact, that is exactly what the market did, and we were able with students to capitalize on the move to the upside. And then after that, I made a new breakdown on TradingView telling to all of you, now the pattern is complete. The market has reached the previous support here, which was acting as support here, support here, support here, which is now turned resistance. And from here, we want to see the market make a move to the downside, which is exactly, again, what the market did. You find also this breakdown in description, and I really suggest that you go and check out both the breakdowns because, as usual, they will be educational. But now, let's speak about the situation that we have right now on Euro CHF and how we can be looking for a potential capitalizing opportunity. So, starting from where we just left, we know that the market, after completing this overextended M formation, has reached the neckline. And from there, it has made the move to the downside that we expected. Perfect. Now let's speak about where the market is at the moment. After this retracement, the market has reached the structure that we have at this zone. In fact, here we have some structure. Why? Look, during this move to the downside, the market here stopped, made this move to the upside. I will zoom in, made this move to the upside, then broke the zone back below. This previous support is now turned resistance. In fact, the market here respected the zone and broke again down, again respected the zone as resistance. Now that the market has broken the zone to the upside and has retested it, obviously the zone is acting as support because previous resistance is turned support in the market. So from a weekly perspective, we can expect the market to make a move to the upside, not a higher high, keep in mind, but a little bit more of a move to the upside, okay? A rejection from the area. What we can also notice is that this is a strong impulse, okay? If we want to measure the retracement, what are we supposed to be doing? Taking our Fibonacci from the low to the high of the impulse. And what we can see that the market currently has rejected the zone in between the 0.618 and 0.786. Obviously 0.618 is the golden ratio, and the market has rejected this zone. Now, before we go down on the daily time frame, let's speak about what we have from a COT perspective, so commitment of traders. What big banks and institutions, so the biggest speculators in the market and non-commercials, are doing in the market. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Let's see. Now, from a euro perspective, what do we have? We had here all the way down at minus 114k net positions, meaning that institutions had way more shorts than longs on the euro, with 271k shorts and 157k longs. And we had a clear shift to the completely opposite situation in time. So from having way more shorts than longs to having way more longs than shorts. In fact, currently we have 170k net positions with 187k longs and 69k short positions. So definitely we have a strong euro. In fact, with the last report alone, we can see that they closed 19k shorts and opened 2.4k long positions on the euro. If we go and see what we have from a CHF perspective, what we can see is that currently we're sitting at 1k net positions from the positive 8k that we had here. So basically we are shifting again down to a little bit weaker CHF. In fact, we can see that longs are getting closed, but at the same time, we don't see a lot of shorts added with the last report. Actually, we do see some shorts closed. So it's not ready yet to make the move to the downside. But we do have a very strong euro. Perfect. Now that we know also this, let's go on the daily time frame and see what kind of situation we have. Now, from a daily perspective, this is what we have. We have a market that has created the move to the downside, followed by a retracement, rejecting a very specific zone. Why did the market reject exactly this area, in your opinion? Well, in all this move to the upside, there is one candle which is not related to the move, which is this red candle here. And this red candle clearly shows that the market did react to this area, okay? And if the market had reacted to the area, it means that the market is interested in these prices, meaning that when the market is approaching this zone from the upside, this zone will act as a strong demand area for this market. And that is in fact exactly why the market started to move to the upside exactly from here. But anyway, just a quick digression. We had a strong impulse to the downside, followed by the retracement and the continuation to the downside for the creation of a lower low. So impulse, correction, lower low. Now, if you want to be looking for a move to the upside, because remember, on the weekly, we wanted to see the move to the upside, and COT data is quite bullish on the euro. We need to see the market shift the structure to the upside. So basically what we need to see is the market break back above the structure, basically the left shoulder, right? Because after the market creates a move like this, if the market manages to create an equal high, you then have a retracement and the creation of this inverted head and shoulders. However, here we still need to see the creation of the equal high and then the retracement before the continuation to the upside. So the first step here is to see the market actually manage to make this move to the upside. So at this point, we know exactly what we are waiting for in the market from a reactive perspective and not predictive, because always remember, trading is reactive, it's not predictive. So how we will be approaching this situation with students? First, we need to see the first move to the upside, okay? If the market will manage to make the move to the upside, then from here we want to see a retracement. And then inside of that retracement, what we will be doing with students, we will be monitoring price action on the 4-hour time frame, because always remember, monthly, weekly, and daily are for direction. The 4 hours is where you can find the best probability and find the best risk to rewards for your trades. So with students, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bearish market to a bullish market from a 4-hour perspective. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside, completion of this impulse correction and impulse pattern to the upside, completion of the inverted head and shoulders to capitalize on the push away from the weekly support. Now, what I suggest you do is you go and watch the 2 previous breakdowns on Euro CHF that I have linked in description, because they will be very educational. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you the market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. Link is in description, or I will see you in the next video.